Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into employers' holdings, and let me tell you, their latest proxy statement is like a really long email you get from work. It's packed with details, but we're here to pull out what really matters. Think of it as decoding a secret corporate handshake. We'll explain what's going on. This document is basically a guide for Employers Holdings' upcoming annual meeting, a gathering of stockholders. It outlines what they'll vote on, who's running for the board, and how executives are getting paid. It's also got some recommendations like which directors the board wants you to vote for. So get ready for the express lane through corporate governance. First up, electing directors. These are the people who oversee the company's strategy and performance. There were some board shuffles with a new member, Marvin Pestco, coming on board and Michael McSally and James Kroner retiring. The company gives us a mini resume for each nominee, highlighting what makes them qualified, and of course the board recommends you vote for each one. Keep an eye on director independence. It's a big deal for corporate governance. It's worth noting that the average tenure of independent directors is about 5 years, and over a third of them are women. This shows that they value having a mix of experience and perspectives on the board. That's generally a good sign, but also can be a PR move, so let's keep digging. Now, into the nitty-gritty of how Employers Holdings is run. They've got corporate governance guidelines that are basically their rule book for how the board operates, aiming to keep things ethical and efficient. A key part of this is director independence, meaning most of the board shouldn't have close ties to the company, preventing conflicts of interest. Also, Johnny Mocard, an independent director, is the chair of the board. Having an independent chair is often seen as a positive for oversight since it prevents the CEO from having too much power. Committees break down the board's work. The audit committee keeps an eye on the finances, the governance committee handles nominations and corporate governance, and the compensation committee decides how much the executives get paid. Committees do have a chair assignment rotation process for directors to gain more expertise. If you want to take a closer look yourself, you'll be able to see who's on what committee here. Here's where things get interesting. Stockholders get to cast an advisory vote on executive pay, often called a say on pay vote. It's non-binding, but the board pays attention. Let's look into the compensation discussion and analysis. This section explains how Employers Holdings decides what to pay its top executives, including the CEO, CFO, and other high earners. They want a program that rewards performance, aligns with stockholders' interests, and doesn't encourage risky behavior. They say their executive compensation program is designed to be tied to company performance and aligned with shareholders. It also states that a significant portion of compensation is linked to long-term performance, specifically how they manage their book value per share. Here are some performance highlights that they talk about to justify high compensation. Premiums were up compared to last year, investment portfolio income was up as well, and they returned money to stockholders through buybacks and dividends. So basically they're saying we did pretty well, so the executives deserve to be rewarded. In 2024, executives got increases in base salary and were awarded cash bonuses. These are also key metrics: ABVPS and adjusted GAAP calendar year combined ratio, which are financial measures that drive the company's stock value. On the other hand, they have policies to claw back the cash if something goes wrong. In the past, stockholders overwhelmingly approved their executive pay program, signaling they were on the right track. Antonello, the president and CEO, saw a base salary increase from $700,000 to $800,000. Other executives saw smaller increases. For cash bonuses, Miss Antonello received $800,000, which is a significant amount, while the other executives received bonuses ranging from $1,200 to $2,000 to 2,000 bonuses, cash bonuses. These cash bonuses are awarded based on the financial and business results as well as execution of the company's business strategy. The numbers get larger. Most of the long-term incentive is in performance stock units. These are based on the company's ability to achieve certain metrics over a period of time. The PSUs will pay out in 2027. One important thing to note is the senior executives are required to hold a certain amount of company stock, and their target ownership is 4x base salary for the CEO. The company also has insider trading and anti-hedging policies for directors, executives, and employees. The Human Capital Management and Compensation Committee says that they have reviewed this compensation discussion and think it's fair. Time for a high-level overview of the compensation. For 2024, Catherine Antonello's total compensation was $3,746,839. The others were in the $800,000 and $500,000 range. And here's a more detailed overview of the equity, what is time-based and what is based on performance. Remember to take these tables with a grain of salt. There is also a key executive change in control and severance plan that outlines benefits and payments if executives were terminated, died, or became disabled. Finally, the CEO pay ratio. It's a measure of how much the CEO makes compared to the median employee at the company. For employers' holdings, it's about 34:1. This just means that the CEO makes 34x what the median employee makes. And lastly, pay versus performance. Here we can see how total shareholder return relates to performance-based metrics. The numbers that are being linked to total shareholder return can be seen here. The company believes that adjusted GAAP calendar year combined ratio and change in adjusted book value per share are most important. Last item on the agenda is the appointment of Ernst & Young as the auditor. The board wants you to agree with this appointment. The audit committee ensures and approves all accounting related services that this firm provides. Here is the dollar amount that shows the audit fee for this year and the previous year. Audit committee has approved the inclusion of this audited financial statement. Now let's step back and look at the bigger picture. Employers Holdings operates in a pretty stable industry, workers' compensation insurance. They appear to be managing costs well and growing their business. They are gaining economies of scale, but they are subject to all of the same factors that face insurance companies. They seem committed to returning value to stockholders through dividends and buybacks. It also seems that they did a good job with it in 2024. Also, in terms of risk, as with all compensation plans that are primarily driven by financial metrics, there is always a chance that unintended actions or consequences occur. Also, Moldig Roll Paolo's holdings seems to be on a good path with opportunities to continue to improve. Thanks for watching. If you found this helpful, please hit that like button, leave a comment and subscribe for more deep dives into the world of corporate filings. See you in the next video.